Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is January 5th, 2015, and it is a new year. Today is Monday, so it's the first Monday of the year, first week of the year. We should have some USD non-farm payrolls numbers coming out later in the week. For some reason, the economic calendar is not populating here, but what is eventful today, the GBP construction number coming out at 11:30 South African time. So you might want to look at the GBP. But looking at the markets, let's look at the EURUSD. This is a monthly chart, of the EURUSD, and we see where we're at. We're really at multi-year lows here. We broke this 122 level. We breached the 121 level. And we even breached the 120 level, which psychologically is a very big number. The next support down, I would say, is 1775. We traded as low as 1866, 1.1866 overnight, due to maybe some light volume trading. But as you can see, there are real sellers into this market. This could be attributed to the lack of stimulus in Greece. It could be attributed to sanctions on Russia and thereby curtailing some of the exports from the EU to Russia. So, whatever the reasons may be, okay, the graph tells the tale, and there are real sellers in the euro, and there are real buyers in the USD. So, looking at this technically, we have one of two options right here. Okay, we can continue trading in these lows, or we can bounce back very quickly. I don't see a catalyst to bounce back very quickly, but then again, on the downside, we're still very limited until 117. So this is a precarious place to really trade it heavily, I would say, in either direction. But I would be very keen to keeping this on my radar and letting myself know where it's trading, when it's trading, and how it's trading based on these numbers. So let's keep an eye out to see what's going to happen later in the week with the USD, non-farm payroll coming out first week of the year. And let's see if this is going to bounce. Okay, this is really something that you should have on your forefront. GBPUSD also hitting new lows for the year. Also, well, I don't think it's multi-year lows because honestly, on a weekly day chart, we're still hovering in this area. So we have further lows to hit in the GBPUSD, but in any event, we are hitting a very significant support level right here, and we're hitting it in multiple currencies. So you may want to pick up a little bit, see how it's acting, see if it does bounce nicely, but be careful and be aware that when you're picking bottoms, that you should have a very tight stop loss. Okay, looking at the USD Japanese yen, not on its dead highs. Okay, it's really not on its dead highs, but it is very close to it. So still some relative strength for the USD versus the Japanese yen, trading at 120. Looking at the GBP Japanese yen, also traced a little bit here on a weekly chart. Let's see if it's going to bounce back, but I'd be inclined to think that it's going to trade within this range, between 187 and 184-ish, 182-ish, okay, until it breaks out from this type of range-bound trading, okay? So it's not really trading in a trend, so I would be more inclined just to buy maybe the bottom of it and sell the top of it. Looking at the gold. Gold hit 1,200 just last week. Looking at the daily chart, ooh, okay, that brings it out better a little bit. We're really in the middle of the range here, okay? So I don't see this much as an opportunity because we're just, trading between 180 and 1,200. So if you're buying this 1,200, you're selling this 1,200 and buying this 1,180, you're doing okay. But again, it's not a high frequency trade. It's not a buy and hold trade. It's really a scalping trade, and just get in, get out. And it's a little bit hard to tell when it's going to go up and when it's going to go down. So, keep that in mind when you're trading the gold. Looking at the Dow Jones sold nicely into the end of the year instead of closing up above 18,000, although we hit 18,100 almost. Do we have room to go higher? Yes, we do. And I mentioned this in the yearly review that we gave a webinar last week too. You know, it looks like, you know, just because it retraced, let's say, 150 points, 300 points, does not mean that it's now a sell. It made this little double top. Okay, let's see if it does break this further down, and if it breaks down 17,000, 1,200, then I'll be more inclined to think a little bit more on the negative side. But right now, it's still a strong index. It's still going up. What's not like with the oil, as you can see here, we're at all-time lows here at $51.87 per barrel. Okay, they're pretty much giving it away. This is due mostly because the U.S. is consuming its own oil and producing its own oil, being less reliant on Russia and Saudi Arabia for its oil. Either because it's producing its own oil or it's getting more oil efficient, creating cars that are more oil efficient, etc., etc. So whatever the case may be, price of oil is going down. Is it going to be like this forever? I don't think so. But then again, you know, to see it rebound, you just have to wait and, you know, see some sort of technical confirmation that it's going to rebound. So this is Fred Razak at CM Trading. I want to wish everybody a great trading day. Thank you.